Data Derivs podcast. I'm here with Reggie and Jake of Hook Protocol, which is an NFT options platform. Guys, how's it going?
Doing all right. Yeah.
Awesome. So I was thinking, kind of before jumping into your guys' protocol, maybe we could get a quick background of like what you did before going into crypto and how you guys found your way into crypto.
Totally, Reggie. You want to kick it off?
Yeah. Before crypto, just kind of been doing a bunch of stuff, mostly like around consumer social. I kind of started my career doing ML engineering at Twitter. And I kind of continued social after that, worked at a small social startup where I scaled it up to like a couple million users. And then I kind of, after leaving, had been getting like more and more into crypto. Like I've always tangentially been in like as like an engineering thing, reading Solidity here and there. But I like really started to get in more as like a friend started showing me NFTs, like artists he knew that were like doing a lot of cool NFT stuff, a lot of generative artwork, which I always really liked. And I kind of got into it more, like helped some people write some contracts for NFT things, small things like that. And yeah, I was freelancing a bunch and eventually just started hacking on stuff with Jake.
Oh, that's awesome. And Reggie, what is ML engineering?
Oh yeah, sorry, machine learning engineering. I was mostly like working on infrastructure for like making the training and serving of models faster.
And you mentioned that you were able to start like getting millions of followers to some of the socials that you were working on. Is that right?
Yeah, so I worked at this app called Dispo. We were originally co-founded by like a large YouTuber. And so with that came a lot of initial growth and traffic to the product. And it was quite a challenge, just like being able to like work with that and like handle it.
That's fascinating, especially in the NFT space where it's such like a newer asset. People don't know how to value it, but a lot of it's branding. And I imagine like the social following behind different NFT projects helps the value and the market around it. So that seems like a really good fit for this niche. Jake, maybe we could learn a little bit about your background as well.
Yeah, for sure. So, kind of pretty different maybe than where Reggie came from or how he got into crypto. But I went to Rice and moved out to San Francisco after I graduated just with a CS degree. I was a software engineer at a kind of a small startup. That company pivoted, and I had like this long time interest in art. So I decided that I wanted to go build a company, which was actually originally also called Hook in 2019, around the idea of kind of selling fine art on the internet. We ended up getting in a kind of a way pretty lucky because of COVID, where a lot of the in-person fine art sales, so think like paintings on a wall, like, with a value, call it like $50,000 or something like that, actually were done in person and all of a sudden needed to move online for this industry to continue. And we were kind of well positioned with like, one of the best pieces of software that you could use to do that. So we ended up partnering with a bunch of major brands in that space, including galleries, curators, art fairs, things like that, to produce these online exhibitions, and sold several $1 million worth of art through the platform. Ultimately, one of the things that happened is we were trying to kind of go more directly to artists. And we kept on hearing this stuff about NFTs. So I got really fascinated by, how can we, curate NFTs? Essentially, we were one of the platforms that Super Rare used a long time ago when they were first exploring like their kind of curated sets and curated spaces. And this is also like when Reggie kind of came into the fold and was working with us on adding NFT support into that core product. And ultimately, kind of through seeing that and being, kind of having this front row seat to watching the, transaction costs of the art market compress from, 35%, which is typical or even low for a fine painting, to like 2.5% of OpenSea, and all the kind of benefits of liquidity and, and basically that liquidity premium that you see in the price come as a result. I just got really excited about NFTs as a new way to trade really the vast majority of assets that exist, in the world today. And kind of seeing that, we decided that, the right thing to do was, pivot our efforts. We raised new financing, and Reggie joined as co-founder to kind of build a new team and a new product really around this idea of options and maybe derivatives more broadly for NFTs.
That's fascinating. So you guys both have like perfect backgrounds for the NFT space. Jake, you were mentioning that in TradFi art collectibles markets, in the physical world, the commissions are as high as 35%. Did I hear that right?
I mean, commissions are as high as 50%. So you're kind of doing, let's call it something equivalent to like a primary drop with a gallery as the traditional artist. You would expect that the gallery would take 50% of the revenue for selling that work, to a collector. Now, it is a little bit different in the sense that the gallery may be fronting you production costs, where buying materials to build the thing. They have a physical space with full-time employees that they have to operate. Selling to this set of collectors is actually arguably a lot more challenging than it is to sell an NFT, because the possibility of secondary liquidity is at a minimum very far off in the future, but more commonly is actually unlikely. So you have to kind of pitch the story around the work and all of that to a much greater extent. So it's not an apples to apples comparison for sure, but I think it is, definitely notable that, if anyone who's an entrepreneur in the fine art market looks at this market and says, well, if only we were able to reduce transaction costs, we would be able to see much, much, much greater liquidity and, much higher valuations. And the question is, how do you get there? And one of the really kind of interesting things as, I guess, an entrepreneur that is really helping grow is just watching how often the right answer is not to kind of change an existing market that you're in, but to go like build a new thing that kind of solves the structural problems of the market that you have, and then you can kind of see how quickly that's taken off. At least to some extent inside the NFT space. And now, of course, we're very happy to be participating in that.
Yeah, that's fascinating. So there's sort of like this transition into the digital space, which brings liquidity, lowers costs, and now we go completely digital assets, which will help liquidity even more. And now you guys are essentially creating the first that I know of, an options market around NFTs. I'm a big proponent of options. That is my first love. It makes a lot of sense. Derivatives help bring liquidity and help manage risk and generate income on an asset like an NFT. So maybe we could just talk about the mechanics of your Hook protocol, your platform, and see exactly like, are these options fully secured? Can I sell calls? Can I buy puts? What do you guys offer right now, and are you guys live?
Yeah, great question. So where we're starting today, which has launched on mainnet in a few collections in kind of a garden launch type scenario about 2 months ago, is covered call options on NFTs. So basically the way that this works is you deposit an individual NFT into the protocol while specifying your desired strike price and expiration. The protocol then mints you back, you being the writer, an instrument NFT, we call it, that basically kind of represents like the bearer of that NFT holds the option, which they can then sell on any marketplace that supports NFT sales, including the one that we host, especially for options at app.hook.xyz, to an option buyer. At the end of the option period, at kind of maturity, one day before, we start a settlement auction, which basically auctions off the underlying NFT asset. The reserve price in that settlement auction is the strike price that the option writer had specified. So if nobody bids anything above the strike price, then the writer simply holds the NFT. That option gets burned and is basically worthless for the option holder, and they can write another one. Now, in the other scenario of someone actually is bidding in that option, we basically send the strike price at settlement time back to the writer, so they earn the strike, basically in exchange for selling their NFT, and then the option is exercised. Then the current option holder can withdraw the spread between that high bid and the strike price, which is where their proceeds come from. And then, of course, the bidder, in exchange for their high bid, receives the underlying NFT. So actually right now, this week, we launched a market for art gobblers, because that was an exciting mint that happened this week. We had several options get written, and it seems like 2 of them today are going to expire in the money, and that settlement process has begun. So you could go and bid right now on those underlying assets, and then potentially resell them on another platform.
That's fascinating. And so you guys are live on ETH mainnet, and how many protocol or NFT projects do you support at this point?
So today
we support
we're
about five.
5? And what are the 5 projects?
Yeah, so right now it's Rap CryptoPunks, Art Gobblers we just released. We've been working with this collection, Good Minds, which has been really helpful and instrumental from like kind of through launch. And then we are kind of slowly testing out 2 other collections.
That's fascinating.
We have an early access program, essentially for people who are, frequent users of the protocol to be the first people to participate in new markets. One of the reasons that we do this, in addition to kind of giving us an opportunity to learn about the market dynamics, is to help manage the amount of liquidity that's available. So often when you start a market, there's not very much liquidity available on options, and this way we can kind of, basically suppress the demand side for a period of time before launching more publicly.
And so let's say I own a CryptoPunk and I want to sell an option against it through hook.xyz. Do I get to choose the strike price that I want and the expiration that I want, or is it set like 20% above out of the money plus this fixed expiration? How do those mechanics work?
Yeah, so you got to choose, but the protocol is completely permissionless. But in our our D app, we try really hard to provide really good defaults, kind of in the way a lot of traditional finance options platforms work, where you can't just specify any strike and any expiration, but they kind of say, here are a couple of strike price options, or here are a couple expiration options, and here are the pairs that you can select from. We really try to adopt that model. I think as a project, we try extremely hard to be very user friendly and have a clean UX and really reduce the friction of participating in derivatives, especially with NFTs, which aren't are effectively brand new. And yeah, so we're going to continue to improve on that. But right now it's, you have a couple of choices to choose from.
One of our goals over time is to prove out the kind of secondary market for these options. So today, you can write an option and offer that option on the primary side will sell to an individual buyer. But we've seen a much less activity of that buyer kind of reselling the option to say another person. As time has gone on, as the price has changed or whatever. And one of the best ways to do that is to kind of concentrate liquidity around fixed points, inside the possible kind of space of options that you could buy, which is exactly what we're attempting to do by fixing these things, at least in terms of inside our interface. Of course, as Reggie mentioned, you can write any option you want theoretically in the protocol.
Yeah, that's fascinating. And in the option space, one of the things that people look at is the implied volatility, or how volatile the underlying asset is. That is a lot simpler when the tokens are fungible. But when we look at non-fungible assets, say CryptoPunks that have no cigarettes in their mouth and some that do have cigarettes in their mouth, maybe those have a different historical volatility and price range. Has anyone who's approached your platform kind of thought through those problems? And what kind of sort of pricing are you seeing in these option markets?
Definitely. So I would say we typically are seeing pricing that has a implied volatility at a premium to what your measured floor volatility over the last few days have been. We think that this is because people are really buying these options with eye towards an event that they think is going to happen, or kind of inside the excitement to get something new. And also they're buying these things because, unlike in fungibles, it's much more difficult to size your positions inside NFTs, where, like you mentioned, a punk floor is I think it's 60 something ETH right now, 68 ETH. Which is quite a bit of money, but a punk option might only be 2, 3, 4 ETH, depending on what the terms are. Anyway, so as kind of a result of this, the market sizing at each of those price points, we're seeing things clear at a premium to the volatility that you might expect. In terms of like how trades impact the implied volatility, that's definitely a question that's harder to measure because one of the challenges is, of course, like what the appraisal of that asset is at the time that the option is sold. Basically in order to even compute the IB, you need to understand what the spot price is in essence. Our kind of thinking is, however, that the vast majority of people are really trading these things like floor assets, and either the floor price or kind of a price history of last sold price or the minimum last sold price over call it the trailing few hours. Yeah, it tends to be like a better proxy for like what the spot is actually, especially when it comes to computing IB and option price.
Yeah, that's fascinating. And then, have you guys thought about? I could see a very good use case here for, say, cash secured puts. Like, I want to buy this punk at 50 ETH if it ever goes there, so therefore I'll buy a cash secured put. Is that something that you guys plan to start offering as well? Maybe like the put side of the market as well as the call side?
We're kind of researching this really heavily right now. I think the first thing I'll say is that we're focused on getting liquidity inside the call market to begin with. Obviously there are synergies in that goal with having a put side of the market as well. Ultimately we think there are pretty specific use cases for calls that exist today and that we want to see develop more. That being said, one of the really interesting things about puts and NFTs is actually the puts market is probably like the biggest derivatives market that exists. It's just disguised as the lending market today. So if you look at platforms like Arcade or Nifty 5 or a few others, people are basically doing these 50% LTV loans that are essentially kind of insurance in case their NFT declines in value something by more than 50%. And because there's enough lenders, or there's enough capital that's interested in seeking that yield, which by the way is very expensive yield, very expensive borrowing, for the time being, they're able to do that. For a bunch of reasons, partially related to the cost and then partially related to the capital efficiency of keeping these things cash secured. We actually believe that, for the vast majority of users, lending and borrowing may be a better implementation of a put option than an actual put itself. There are a couple of use cases where you might want the put. One, obvious one is if you're writing a call option, owning a put option that kind of matches it, potentially cash secured instead of requiring the NFT to obtain the put is like pretty interesting because it allows you to hedge an option in particular much better. There's kind of generic hedging strategies where puts are okay, but not great. And then there's also an interesting case that if you're writing a loan, which is of course something that, if you're lending money, which is of course something that a lot of people are doing, that owning a matching put would be really, really good. It's just important to keep in mind that today that put would probably be more expensive than the interest that you would earn on that loan. So it's potentially a little bit less interesting for lenders for that reason.
So something you mentioned that I find fascinating here is about the lending market and how that actually might resemble a put. So just to be clear, the lending market, is it like sort of non-recourse? I lock up my punk, take a loan against it, and theoretically, like if I just walked away, they would never know, or like they couldn't do anything?
Well, they would seize your punk, but yes, it's non-recourse, right? So you post the asset and that's the collateral.
So essentially, the lending market is essentially advertised as a loan, but they're really selling sort of a naked put because basically I'm locking up my punk, and if the punk prices go really, really cheap, I can walk away. The interest that I paid is sort of the put premium, and they can't really.
And in fact, in the typical implementations today, you actually don't owe the interest until maturity, so you actually didn't even pay the premium if you walk.
Interesting. So that's a super inefficient sort of market right there that there could be some opportunity. If you own a bunch of punks, you should take a bunch of loans because you're getting free puts, is what I'm hearing.
And people are doing this. I mean, the issue is that the loans, aren't quite free in that if the punk doesn't decline in value, the interest expense is very high. So you were talking about, like, I actually don't know what the current rates are on punk, so I may be misquoting, but in the past it has been, as high as 40% APY, and I'm betting it's now kind of in the 20% range. So these are expensive loans to take. at, deep kind of, let's say, out of the moneyness if you compare it to put options, 50% loan to value. And I think this is just an important thing to remember, is that these lenders understand that they're basically going long punks when they are writing these loans. And nobody wants to be long anything in NFTs in today's market, or not nobody, but it's definitely like a hard sell. And you basically have to pay them very well for them to be interested in doing that, which a lot of people are doing, it turns out.
Fascinating. Reggie, talking about the business of hook.xyz, have you guys raised funds? Is this self-funded? Do you guys plan to raise a round? What are kind of your guys' roadmap from a business perspective?
Yeah, so we've raised a bit of new capital that we're like not prepared to announce yet. But I think for right now, our plans for the business are really just like try to prove out, interest for derivatives, specifically call options for NFTs. Really just like experiment, find what collections like work really well with what we're trying to offer, and then just continue to like build up and build out. Like find more collections where there's like great fit for the communities. Make it simpler, make it easier to work with collections, so they can maybe use call options as part of their launch strategy. All these like different things are kind of on a roadmap, but it really depends on how like early growth pans out for us in what direction we go.
And other platforms such as like LooksRare have tokens in the market. Is that something that you guys have on your roadmap as well from a business perspective? Maybe if this goes really well, that you guys will launch a token and people can participate in sort of fee discounts or some tokenomics around the platform?
Yeah, no plans for a token right now. I think there's like stuff we've like thought about as it pertains to like more akin to like badges, but like definitely nothing in terms of like a fungible token yet, or like anything like that.
Yeah, I'll hype Reggie up a little bit here. I mean, one of the great things about having someone who, like you mentioned, has worked so much in consumer products and really understands how to make people think that way, is that kind of our space of experimentation that we're open to and confident that we can execute on in terms of creating a great gamified experience on our protocol, whether that's through badges, through other type of mechanisms, is really exciting. So we have a lot of stuff in store kind of in that direction, and I think one of the ways that we're planning on providing value to active members of our community, active users of the protocol, is through those types of products versus doing something like a token, which to be honest, we think hasn't panned out that well for the majority of companies in the last cycle that decided to go that route.
Yeah, that makes a lot of sense. And so far, since you guys have launched a couple of months ago, have you guys seen a decent amount of volume? Has there been some options that have been bought and sold?
Yeah, we've seen a good amount of early activity. Given that we kind of did our guarded launch with Punks, which was at about a 70 ETH floor at the time, and Good Minds, which was about point of like 5 ETH. We saw 2 Punk options get made early on. One that got sold to a party bid, and we saw a bunch of these smaller Good Minds to the effect of, I think, maybe 15-ish. But we're again now seeing some success with our gobblers and are going to kind of experiment more with like some collections that are like launching soon, some collections that are like getting like revitalized trading activity.
Fantastic.
Yeah, I think the early signs are like looking promising, but given like market conditions, but still a long way to go.
Yeah, this is awesome. And yeah, I can imagine like the current sort of bear cycle in the crypto space and especially in the NFT space is probably the low point for interest and activity, and it's probably just like once we go back to bull market, like something like this can get a lot of interest, especially once we have higher prices. Selling a call is pretty juicy, and I can't imagine someone not wanting to do that if they own an asset like this and it can now generate income. So kind of just before we close up real quick, how big is your team, and how can someone find your guys' website, and do you guys have a Twitter, YouTube, anything like that?
Yeah, so right now our team is 6 people. We're mostly split between New York and Buenos Aires. You can find us on mainnet, app.hook.xyz. Our Twitter is @hookprotocol. And yeah, you can find myself and Jake on Twitter as well. Just go to whoever Hook's following and we'll be there.
Fantastic. And then kind of just wrapping up here, just on a more kind of fun tone, what do you guys like to do outside of work when you're not building this protocol?
I like to shop for furniture on Craigslist. It's one of my like weird now office furniture too is really great. But weird hobbies.
That is awesome. You find good deals out there?
Like so many weird deals, weird sellers. It's just like I don't know. Maybe it's just like the kind of my carryover of like liking to do NFT trading, but in the real world. But it's quite a fascinating little market.
That is awesome. And what about yourself, Reggie?
Yeah, Jake's got me into the Craigslist hype recently for furniture. I think on the side, I'm like, I play a bit of piano, just kind of music person. Unfortunately, obsessed with Twitter and video games and stuff too.
That is awesome. Well, guys, this is a super fascinating project. I think as the NFT market starts to gain adoption even more and we get a bull cycle, this is going to be amazing. And the ability to sell call options on your NFTs is a great way to monetize an asset that is worth a lot, and so far it's been hard to monetize. So guys, thank you so much for coming on the podcast. Everyone who tuned in, thank you, and we'll catch you next time.
Yeah, thanks so much.